Welcome to the Pirls Stock Market Commentary for market week ending Friday, June 6, 2014. Market breadth. With this past week's market rise, our bull-bear point and figure ratio rose from 1.31 to 1.58, advancing further into bullish territory. The total count of securities in bullish or bearish patterns rose 4%. To 2,138. The count of bearish stocks decreased 7%, while the count of stocks in bullish patterns increased 12%. The Pirls PNF Market Breadth Summary Chart shows us a market now 3 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 131 points for the fourth rise in 13 weeks. At a negative 176.11 points, it continues below all 8 tops above plus 100 and has just risen above the July 2012 low and continues above the other 6 bottoms below minus 100 in the last 35 months. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in accumulation mode. In the last 2 weeks, it had 4 accumulation days and 1 distribution day. Of the other indexes, both the Diamonds Trust and the S&P 500 deposit receipts ended in accumulation mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended in neither accumulation nor distribution mode. Momentum. At Wednesday, 5/21 close, the daily CCI 20 gave us a counter-trend Shamu long entry signal with the pivot within the plus or minus 50 range. At Tuesday, 5/27 close, the CCI 20 daily had 6 consecutive days above zero, giving us a change of trend in the Woody's CCI trading system. This past week, the CCI 20 declined and then rose again, but didn't drop below plus 100. It is currently at 141.91, above the plus 100 line, so we stay in the trade. We will continue to report the results of this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 3 weeks ago, while the daily CCI 20 began a Woody's uptrend 1 week ago. The CCI 20 weekly remains in a Woody's downtrend at minus 90.83 and is outside the plus or minus 50 range for a valid zero line reject. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only 2 of the bottom 5 are negative. Bullish, banks have entered the top 5. Semis remains in the top 5. Gold and silver continues to lead the bottom 5. Oil has entered the bottom 5. REITs has left the bottom 5. Bearish, networkers, computer hardware, and comp tech have left the top 5. Focus this week. If the market looks manipulated, perhaps it is. From www.zerohedge.com, included in an article entitled Small Caps Surge to Best Week in 2014, is a selection of market graphs for the week, some less natural looking than others. And here is what is less natural looking. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary. Hoping that you're having a wonderful weekend, that you have a fabulous week coming up, and wishing you true success.